Good afternoon, everybody. I'm Tommy O'Brien, coming to you live from TFNN, 3 p.m. Eastern Time, final hour of the trading day, and you have markets right near the lows of the session. You make a low at about 2:20 p.m. Eastern Time, and we're right back near that level. S&P's off by 15 points after we started off the session in positive territory, off about 0.2% for the S&P's. NASDAQ 100, we're off by 0.4%, off 100 points on the dot, 25,554. You got the the Dow off by 0.3%. Again, approaching the lows. How about the little volume on that selling? Right, we're coming down. We'll see if we get some volume. That was some selling at about 2:20 p.m. Eastern Time. The Dow negative by 0.3%. How about the Russell leading the way, man? Russell up by 19 points, up 0.7%. And how about it? You take a look at the Russell. Look at the industrials. Okay. And many smaller companies you might not be even familiar with. Bloom Energy, how about up 13.8%? AeroVironment, up 7%. MCore Group, up 4%. Fix Systems, that's a $35.1 billion company. Comfort Sys, Bloom Energy, a $27.5 billion company. Joby Aviation, up by 7.6%. The Russell, you got some healthcare stocks as well. You compare that to the NASDAQ 100. A lot of red over there. Meta, a bright spot. You got AppLovin, up 4.7%. Intuit, Shopify, NVIDIA, up by 1.8%. Bitcoin, down $1,000. Pretty healthy number considering we were pushing 80,000 recently. Bitcoin, 92,175, off 1.1%. Ethereum, off by about 0.9% right now. We jumped to yields. So we got a move going on of lower price, higher yield. Maybe the economy's not as bad as we much thought. So there's going to be pressure. Maybe they get the cut. This is the market. Maybe we get the cut in 6 days when the Fed meets next, December 10th. But where do we go from there? Okay, if you're seeing headlines like this, which is U.S. jobless claims fall to 3-year low over Thanksgiving. Now, what I will warn you is it's a holiday week. There's always variance, but boy, you better believe there's variance for people getting laid off. Literally Thanksgiving week. Right now, the market looking 87% chance we get a cut. In 6 days by the Fed, only about a 13% chance we stay where we are right now. And we get the dollar bouncing at 99, and yeah, gold and silver. 42.39 in gold, up by $7. You jump over to silver, down by 2%, 57.40. Got a lot of strength on that Monday move. 138,000 contracts in silver. We're backing right down to that area right now. We've only done about 94,000. Check out the volume in gold. We had some nice volume, but not as substantial on Monday. Yeah, we've just backed off on lighter volume. They both look good. You know, yields look like they're going to be under pressure to the downside, even though we're getting decent jobs numbers. Okay, the president's not putting in a new Fed chair who's going to be cool with a December cut, and then we chill out for a while. Even if the job numbers and the unemployment is coming in like it came in. And you're talking about a number? 191,000. Okay, initial claims decreased 27,000. Now, continuing claims, 1.94 million. That's down as well. And that one is not incorporating the holiday week. Always interesting that continuing claims 1 week delayed versus initial claims. And those are the highest since 2021. In terms of wages, that number inched down a bit as well when we were talking about. But yeah, I'm talking yesterday on ADP. And then you talk layoffs, right? There's something for everybody. U.S. layoff plans ease, but still most for November since 2022. Now, to compare months over years, there's a lot of variance, right? The economy, and yes, months matter, but, you know, just because it's in November versus November in years past, this one, the way they put it, the most for November since 2022. Well, yes, for November, but job cuts was only 71,000. We had bigger numbers than that in 2024. We had bigger numbers than that in 2024 again in August. We had way bigger numbers than that earlier in the year. and we had way bigger numbers back in 2023. So yeah, you got to go all the way back to November 2022 to get in November. We've had many months over this level. And we jump to Meta. So it's a big number. 30% potentially is what they came up with. Budget cuts as high as 30% for the Metaverse Group next year. And they usually ask everybody to cut about 10%, and that's standard. So they had a series of meetings at Zuckerberg's compound for executives in Hawaii last month. They look for 10% cuts across the board. They're always trimming the fat. 10%, let's go, trim it up every year, which has been the standard request during similar budget cycles in the past few years. But guess what? This year, the metaverse, we're trimming it by 30. Yeah, more drastic cuts. Meta's virtual reality group, which makes up the bulk of that spend, and that would target the Horizon worlds as well. You get a big pop this morning, you give it back slightly. And yeah, we jumped to Paramount and Skydance. So they're heating up all right. And boy, the battle's on. So David Ellison, son of Larry Ellison, one of the most wealthy men in the world, and they're lawyering up and they're ready for the battle. Hey, he's good buddy. Larry Ellison is great buddies with Elon Musk. Nobody loves suing people as much as the richest people in the world, and they're already getting ready for it. They're sending their lawyer letters. Paramount said it was the only bidder whose proposal didn't raise antitrust concerns. Okay. Paramount's been arguing that it offers the cleanest path to regulatory closing, and they took aim at rival Netflix bid in a Monday letter saying the sale to Netflix would likely never close due to regulatory challenges. The streaming marketplace is much bigger than just subscription services. And yeah, they upped the pressure with a second letter on Wednesday that accused the company of abandoning the semblance of reality of a fair transaction process. It's good to be wanted, as they say. Warner Brothers Discovery giving back some of those gains today, but quite a run. Off by 1.5%. We're coming back, folks. We'll take a look at some of those streamers. We'll take a look at Netflix. We'll come right back.